Look at this chart. It gives you a picture of India's UPI landscape. The transaction volume handled by the big fintechs. PhonePe and GPay clearly stand out here. A classic duopoly capturing 85% of the market between them. And then there's everyone else. Cred, Amazon and Paytm clearly missed the UPI bus by a long mile. But all might not be lost. There might be a new disruption in town, and it has 4 letters: CBDC. Central Bank Digital Currencies. It will change the way Indians look at payments and might be a new ray of hope for fintechs. More than 80 countries worldwide are brainstorming whether or not to take the digital currency plunge, and 11 pioneers have done it already. And it might change the way these fintechs have worked before. Let's dig in. Let's zoom out to 2016. Your life was basically shaken by the government of India.
1000 rupee currency notes presently in use will no longer be legal tender from midnight to night, that is 8th November 2016.
Overnight, people like you and me literally ran to ATMs to secure some cash because the government had suddenly decided to ban money. Ban money. The one thing it has complete sovereign power over. Well, in the same year, Dr. Raghuram Rajan's RBI was brewing up a little side project. A project that would go on to change the way you and me paid for things. UPI. UPI started slow, but a few product teams got the knack of how revolutionary it could be for their businesses. PhonePe, Paytm, WhatsApp, Bheem, and Cred came into the picture. These players started to gain market share of a segment that didn't even exist before 2016, and thus began the PhonePe and GPay duopoly. But now back to the real money. The game isn't zooming out and understanding the macro. Where does a digital currency fit into the grand plan? Now, because all of you understand OKRs, let's think about it like this. The objective of the government has been straight: make India a global superpower. A key result to get there is to become a $5 trillion economy. Now here are where things get interesting. To get to that result, they need to score on particular initiatives. Some of them being digitizing the entire ecosystem, increasing financial inclusion, and having a strong financial backbone to the country. And this is where a CBDC might fit in. But what is a CBDC? Well, it's exactly like cash, but in the electronic form. To understand digital currencies, we need to understand money first. You see, for money to be money, it has to fulfill 3 functions. It has to be a medium of exchange, it has to be a unit of account, and lastly, it has to be a store of value. A digital currency is all of that. But how is it any different from the digital money in our bank accounts? See, it's a little interesting. We need to understand how the current financial system actually works. The cash in your bank is not really cash, but an obligation. An obligation from the bank to you. You're basically loaning the bank some money and they give you interest on it. The bank, in order to earn, takes your money and loans it out to people who need it. These people pay a certain interest to the bank on their sum. As long as they're paying the bank back, they're cool with it. But if enough people don't pay it back, the banks might go bust and your deposits could be at risk. Well, in theory at least. Whenever anything similar has even come close to happening, RBI has stepped in and has done a good enough job to get you your money back. But the money you save in a bank basically becomes a form of electronic money. You feel safe because you see an amount reflecting on your phone's app. It may not actually physically be in your bank account. But it's the responsibility of the bank to make sure you have access to your money when you need it. You see, a CBDC bypasses all of that. When you hold digital rupee, your business is straight with the RBI, which theoretically cannot go bankrupt. And you're holding the actual real sovereign rupee, not a form of it. It's just the digital version of cash. Coming back to the country's financial OKRs now. All of us know the massive efforts of how officials want to get rid of cash in the system. But that's also where the Indian paradox lies. While UPI and Geo made sure that more Indians than ever have adopted to digital transactions, India has also seen a massive surge in cash being used, and most Indians still prefer cash for small value transactions. So a digital rupee promises a lot of things. Some of them being decreasing costs associated with cash management, and boosting a cashless economy, bringing innovations in payments, boosting cross-border payments, supporting financial inclusion, and safeguarding trust on the national currency compared to crypto. The RBI has been very open about involving the private sector into the CBDC ecosystem. In fact, learning from China, they are banking on it. A CBDC would be the RBI's way of getting into the hands of every Indian. And there's no way fintech players wouldn't want to piggyback on this ride. You see, banking systems are old. Even with UPI, when all transactions ultimately have to go via banks, they couldn't really make anything out of the UPI wave. Look at the top UPI apps. Banking UPI apps are somewhere here. The new fintechs have unique insight into customers. They understand user experience and can build apps that solve new pain points much smoother than the old banking apps. Also, what we know as instant payments has a not so instant backbone to it. Imagine going to a chai shop. You scan the QR on their counter and paid your 20 rupees for a nice chai. To you get to see a screen like this. And the shopkeeper hears something like this.
ATM पर रुपए प्राप्त हुए.
And gets a message notification. But what's really happening behind the scenes is your bank and the merchant's bank have received submissions on their ledgers and now have to coordinate with each other. Both banks get tons of requests every second. So they're not really transferring each other money on every transaction. Well, now think of cash. If you'd just given the shopkeeper 20 rupees in cash, there would have been no parties involved. Just you and the chaiwala settling dues instantly. That's where a CBDC kicks in.
We launched trial of our CBDC project.
It's the Reserve Bank getting into your daily life, saying here's a digital currency that has the same features of a physical currency. The ledger here does not lie with any two banks. It's with the main central bank. When you transfer CBDCs, the transaction is final. From one wallet to the other, from one RBI account to the other, without getting the banks involved. According to Atlantic Council CBDC tracker, 11 countries have launched their own CBDCs and 17 are running a pilot. For example, the Sand Dollar by the Bahamas, which allows them to bypass cash transfer for a country divided by islands. And China's E-Yuan, well, not known for being the most helpful initiative by the government. What's interesting is that players like MasterCard and Island Pay are already in on the digital currency landscape in the Bahamas, and Alipay and WeChat in China have also made E-Yuan accessible via their apps. And as you've seen now, the Indian UPI market is crowded. Not much room for new players to come in and disrupt. It's also very unsustainable for fintechs, with the RBI mandate to not shell out any cost to the end user, or MDR, which is a fee paid by the merchant to their bank when they receive a payment via credit or debit cards. The banks and the fintech players end up facing the brunt of the payments wave. With the latest paper of RBI considering levying a charge on UPI, a CBDC could step in and save the day for them. The RBI getting into a digital currency would come with some dependencies on its intermediaries. With the requirement of a CBDC being offline and needing no bank, it gives RBI access to every Indian, theoretically. It also gives access to every fintech player, theoretically. If you think about it, the financial system solves for three types of Indians. People who have a phone or a bank or internet. NEFT and RTGS solve for people who had bank accounts. IMPS solved for people who had a bank account and a phone. UPI went further and solved payments for people with a bank account, phone and internet. Well, the Digital Rupee wants to go deeper. It will solve financial inclusion for people with access just to a phone and not necessarily internet or bank accounts. You see, the rules of the game have changed. It's no longer to become the preferred payment app of choice. It's to become the preferred wallet of choice. RBI has now repeatedly said it's not going to replace any current forms of payment. It's just opening up the avenue for another mode of payment, allowing Indians the maximum amount of freedom. But think about it. Players like Razorpay could be scared for their payment gateway businesses. Payment gateways are known to charge a flat fee on every transaction. Well, if businesses just put up a QR code saying transfer of CBDCs, the payments would go straight to the merchant's RBI account and they would have to be free. India is home to 190 million unbanked people, only second to China. And according to RBI's Financial Inclusion Index, India stood at 56.7 in March 2022. The digital currency could change that. Imagine companies like Paytm, PhonePe, Udaan, and Meesho having access to customers who have a phone but not an internet. That's millions of Indians. The RBI could send stimulus checks and money to the most rural places instantly. Without the need for an internet connection, the remotest Indians could use CBDCs and be a part of the digital economy. You see, digital money can also be programmed. For example, a subsidy being given to buy fertilizers for farmers can only be used to buy fertilizers. And CBDCs are as good as cash, so they can be transferred without any hassles. Sure, not a lot would change instantly. Us choosing a digital rupee or UPI to make payments would be a call on our mood for the day. But imagine being a society where cash practically doesn't exist. That's where the bigger game lies. Companies that understand and optimize to become the preferred wallet of choice for every Indian could be the ultimate winner here. And think about it. A physical wallet is personal, has many things beyond just money. Memorable photos, tickets, receipts, keys, cards, IDs, etc. A few apps almost did this once. Can they do it again? Let's wait and watch.
We make videos on topics that educate and help people become top 1% growth leaders. Weeks and months sometimes go into creating in-depth deep dives that predict how growth leaders should think of their roadmaps in the next 10 years. If insights like this is what you crave, subscribe to GrowthX and hit the bell icon to make the algo make the right choices for you. See you next week.